I'm joined by Fritzi Köhler Geib, the chief economist of KFW here in Frankfurt. So thank you very much for joining us this morning. We're just saying that one of the key issues is the QT program. So what are you expecting in terms of announcements?
Yeah, Madame Lagarde already said that today we can expect an announcement from the ECB. Whatever the ECB is going to say, I'm pretty sure that the path to reducing the ECB's balance sheet is going to be very gradual. And that is because this is really walking the tightrope. The ECB has to take enough liquidity out of the market at the same time as ensuring that bond markets continue functioning.
If you look at the size of the gap the ECB is potentially producing by not reinvesting, is that a concern for the stability of the market?
So far, I think we're in a good position. It's also important to see that it's true that in October last year, yields shortly went up for Italian 10-year bonds to almost 5%. Those yields have already retracted to 4% based on the government's decision to commit to prudent fiscal policies. And I think this is an important message because already when we talk about the gap of financing, always it's the governments of southern European countries that people have in their heads. And I think the good news really is that we've seen commitment to prudent fiscal policies in those countries. And what really matters for that sustainability is the differential between interest rates and growth rates. And I am confident that there is room to maneuver.
Let's look at the rate decision, though, as well, and the potential trajectory of rates. What are you expecting for today and the next sessions?
I am expecting that the ECB will go ahead with a further 50 basis point increase, even though one could say a 75 point increase of interest rates could still be appropriate given the high inflation readings. Yet I think given the composition of the ECB Council, 50 basis points are likely, and I think it is important that the ECB holds course at this point in time to signal that it is, as the Fed, determined to bring down inflation to its target.
Yeah. You have alluded to the Fed. The Fed just did what was expected yesterday. Is there any sort of spillover effect from the Fed's decision onto the ECB?
Well, I think the Fed is a step ahead in the tightening cycle. We have seen that inflation rates have started to come down in the US, yet one also has to say that inflation in the US has already been much further driven by the demand side of the economy. In that sense, I think the ECB will continue to hold course. And given that the Fed has acted as expected, I think that the ECB is in a good position to also continue its course.
Peak inflation is most likely also very close in the euro area, but inflation composition is different than in the United States. So are you expecting inflation to come down substantially with energy prices going down?
I do expect that inflation peak is going to happen in the first quarter of 2023 with the end of the heating period, also when government measures are really starting to show their effect. I do expect that 2023 we will see a considerable reduction of inflation, even though one also has to say that there are effects that will only hit consumers. So inflation will not return so quickly to the target of 2%. This will be a protracted process because we are going to see those ripple effects of energy prices eating through the economy.